Hi, everyone. This is Rosal Lights of Mastery, and today I'm excited to have Nick King, who's the CEO of Vint. Vint is an investment platform that makes it possible for investors of all sizes to invest directly in securitized and diversified collections of wine, fine wine, and rare spirits. Before starting Vint, Nick spent 5 years in the finance industry, specializing in value investments at various hedge funds and private equity firms. Nick has done his bachelor's from University of Virginia. A big thanks to Jacob Sheldon from Shiny for the introduction. Welcome to the show. Welcome to the show, Nick.
Thanks, Rohit. Great to be here.
Awesome. So, you did start off with finance, and you had worked in with hedge funds as well as private equity firms. What led you to get into this world of startups?
Yeah. So good question. Yeah, background in finance, sort of the traditional path of college to investment management. And I have always had this sense of independence and sort of a trader mentality. So growing up, whether it was like Pokemon cards, trading those, and as I got older, on FIFA, the video game, there was a player market where you could trade and arbitrage different players. And I looked at public equities, and it's pretty hard to find those edge type of opportunities. And then I found the wine market. And what was really, really interesting about wine and spirits as an asset class is this economic inefficiency, where in different regions, different sourcing channels, you have price discrepancies that you can find an edge and win. So that mentality, along with being hyper competitive and always trying to learn, I feel like all of that is encompassed in the startup world.
Interesting. You mentioned about wine. I think I remember Gary Vaynerchuk used to run like a marketplace or something, and I had a bit of an understanding through his platform and his marketplace on how you should sell the products. But why do you think wine has performed so well and has given such great returns than the S&P 500?
Yeah, it makes sense. Econ 101, they teach you if supply is decreasing and demand is increasing, the effect of that is price will rise. So you think about, say, a 2010 Screaming Eagle that we have on our platform. No more of that is being made. It's only being consumed. So supply is ever decreasing. And then it is improving and aging while it's in bottle. So you combine those two factors, that's going to lead to price appreciation over the long term. It's an asset class that has survive cycles. So in times of inflation, people, their sentiment around the US dollar decreases. They look for tangible assets like gold, like wine as a store of value. So Cambridge actually ran a really interesting study dating back to 1900, showing that fine wine had generated about 8.5% annually over the last 120 years, outperforming art, bonds, real estate. So yeah, it has a really long track record, but it's been largely inaccessible and opaque for people to really get efficient exposure to the asset class.
Got it. And somebody who's not aware about wine investing and what a wine all about, how do they go about deciding what wine to buy? Does it make sense to buy the oldest wine and the most expensive wine? And what's the minimum amount of investment they need to make?
Yeah, so I'll talk sort of how things used to be and how we've changed them. So in, say, even 3 years ago, one of the only ways to invest in wine and spirits as an asset class was these UK-based managers, where you would send them $25,000 and they would go and pick out wines for you. 3 weeks later, you would get a list of wines back. We thought that was really inefficient and opaque and largely inaccessible. Another was the do-it-yourself method, where you could work with your local wine shop. You could maybe set up your own storage cellar in your home, and do it yourself. So both of those have a lot of problems, whether it's access, high startup costs. So the approach that we've taken, one, we've completely lowered all barriers to entry. So we spent 8 months with the SEC to get qualified under Regulation A+, allowing both accredited and non-accredited investors to access the asset class at like $10 a share. So accessibility is a big piece. Second is accessibility of wine. So for us, we're sourcing $500,000 to $1 million worth of wine at a time. Because we have the commercial licenses and relationships, we get access to really interesting supply at advantageous prices compared to retail. So because of that, scale factor and pricing power, we're able to pass that benefit along to investors so that they can build a portfolio of the best assets. And you ask, like, what makes a wine investable? We're generally looking at wines that are over $200 a bottle, with a strong focus on the top tier of these assets. So we bought a data set that has the last 20 years of wine pricing data. And we created this matrix where we studied the wines based on a price to score ratio. And what we found is that the higher the price to score ratio, this is like the finance nerd myself trying to really financialize the asset class, but the higher the price to score ratio, the stronger the returns. So a really good example of this, and why we're the best financial product to get exposure to this asset class, is DRC is one of the most famous wines. It's produced in Burgundy, and 3 bottles will go for about $90,000. But it's been one of the most strong performing wines out there. So if you think about building a portfolio of assets, you don't want to be more than, say, 10, 20% exposed to a single position in your portfolio. So if you wanted to include DRC in an efficient wine portfolio, you would need to have nearly $1 million portfolio. So, and wine is generally going to be a fraction of your entire portfolio. So for us, you could have bought 1 share in every single Vint offering. We've done 25. That would have cost under $1,500, and you would have an unparalleled portfolio of wine, spirits, futures, and casks.
So super interesting. And what advice would you give to people who want to get into wine investing? How much of their portfolio should be into wine and spirits? And you can talk more about that.
Yes. So I'll give the disclaimer of, talk to your financial advisor, etc. And, this is just my opinion. So I've looked at a number of different studies. So Credit Suisse runs a collectible study, and they're looking at ultra high net worth individuals, and about 5% of their portfolios are being allocated to collectibles like art and wine. So I know Citi has done some work on the art industry as well. But from a portfolio construction perspective, this is a really interesting asset class. Another, thing that I had learned in the past is modern portfolio theory. So how to build this portfolio that is going to generate the best risk adjusted returns. And in order to do that, you're looking for assets that are truly uncorrelated. And with that data set that we looked at price to score ratios, wine lacks any material correlation to stocks, bonds, real estate, and inflation. So it's up to you and your financial advisor, whoever you work with, to decide how much to allocate. But what I can say is it offers really interesting diversification benefits.
Interesting. And what is the revenue model, and how do you sign up with investors for your platform?
Yeah. So for us, it's a marketplace model. We don't charge any annual management fees. Over the past 3 years that I've been working on Vint. I've had conversations with hundreds of investors, and annual management fees have really fallen out of favor. And it's also been interesting to really learn about investor psychology. I find that to be incredibly interesting. So for us, it's a marketplace model. We take a sourcing/origination fee. That fee is dependent upon the spread between what we're sourcing at and what we're seeing in the market. We want to offer our collections at what is market low or we feel advantageous prices. So like one good example was we had a $129,000 Glenfarclas whiskey collection. And our offering price was 17% below the retail value. That collection sold out in under 2 hours to hundreds of investors. So yeah, we charge a sourcing origination fee. That's it.
Got it. And I'm based out of UK. Can I also invest into Vint, or is it only for Americans?
Yes. So one thing that we like to say is anything can be done. And that's a mantra that we have, is like, we can allocate resources to things and find solutions. So yes, you can spin up an LLC and invest. We have a quick process for you to do so and different partners. However, as an individual, it is just US residents and citizens, so have to have a social security number. But we have international investors who've set up LLCs to invest with us.
Got it. Interesting. And you also had signed up with, made some strategic partnerships with Alto IRA and Vincent. In fact, I had Eric from Alto IRA on episode number 207. We're going to put it on the show notes. But how did these partnerships go about, and what's so different about IRA investments and having alternate investments on IRA?
Yeah, so Alto has been a great partner of ours, and in one of their Series A press release, they say there's $30 trillion sitting in IRAs right now, and you can look and see the broad spectrum of how people tend to invest their IRAs. But a lot of the time, people will start their job, check a box, and that is how they allocate their 401k. It gets rolled into an IRA, and they're notoriously, and Eric can speak to this better than I can, but they're notoriously poorly invested. So people look at their IRA as a long-term investment sort of entity. And for us, we stress wine and spirits is a long-term investment. We estimate hold periods between 3 to 7 years. So it does align with that goal of IRA investors for long-term capital appreciation. For us, because we go through the SEC, we set up an LLC for each collection, securitizing the assets. We are actually the only way that people can allocate into wine and spirits through an IRA right now. So yeah, partnerships is, I think, really interesting. That distribution, like Vincent, also they write pieces on us. Alton Insights does research. The more information that we get out there to educate people around, one, alternative assets, but two, wine and spirits as an investment asset, the better. That's really one of our goals, is to financialize this asset class. And there's no reason that say in 2024, the Morgan Stanley chief investment strategist wouldn't say, okay, wine and spirits, it makes sense to allocate 1 to 2% of your portfolio. And the only way to do so in a securitized SEC qualified manner is Vint. I don't think that's too crazy of a world.
Interesting. And since you're the founder of the company, how do you go about thinking about spending time building the company and your resource allocation when it comes to growing the company?
Yeah, that's a really good question. I don't know if I've ever even answered that. So we have a team of 10 now. And I have a co-founder, Patrick, who's our CTO. And I'll say I take a trust first perspective to every single person that we bring on. The way that I view my job is that I'm always removing hats. So I have removed the wine hats. We just hired Adam LaPierre, who's one of the 50 masters of wine here in the US, to be our director of wine, probably the best person in the world to lead the wine team. There's no reason I should be telling him how to do his job. On the customer acquisition side of things, we hired a great growth marketer. So I was able to remove that hat. And, I'm failing at my job if I'm not getting people who are 5 to 10x better than I am at that. So how I allocate right now is about 25% is sort of internal people management, making sure that our team is growing, improving, doing weekly one-on-ones with individuals. On the tech side, that's Patrick. Patrick relays to me how things are going on the tech and product side. Another 25, maybe 25 to 50% is going to be what I'll say like biz dev type of work. So building relationships. I'll throw fundraising into this category, as that ebbs and flows, but right now it's in a pretty strong process. But that'll be the second, like just always networking. I haven't gotten to that point where I say no to calls. I still say yes to basically every single call. And the benefit of that is, when we're looking to hire someone, I've talked to 3 product people in the last year. Let me just go and, ping them, just say, hey, we're looking for someone. And, I'll actually throw recruiting in there as well. Recruiting, networking, and biz dev all fall into this like 50% of my time. And that's where step function type of change happens, is you get someone on the team who is a rock star. They can, change the trajectory of this business. We make a partnership like an Alto and other people that we've been talking with that can change the trajectory of this business. So that's where I feel like my time is really well allocated. And then 25% is still operational. Like we launched about a year ago, and we definitely took the do things that don't scale approach. When we launched, it was a true MVP, trying to get anybody on who was interested in investing. But because of that, there are still processes where like I'll go into Alto, I'll make the deals, I'll send the distributions and things to investors. So I am trying to offload that 25% of operational tasks, but you have to do what you got to do.
Yeah, no, absolutely. I love your resource allocation timelines, like recruitment, business development, investments in one bucket. I think I love that approach. And when it comes to hiring people, what's been your approach, and where do you think you have improved in the last couple of years when it comes to recruitment?
Yes. We've gotten super lucky. So a good story about our first hire was he was actually found on Upwork. We were looking for a wine blog writer, and this is when it was just Patrick and I had like just quit my day job, and we needed someone who was knowledgeable about wine to just get some content out there, start building up SEO. And we found this guy, Billy. Naturally, I disintermediated the platform. I found him on LinkedIn, messaged him, and he not only started working with us part-time for 3 months, he was one of our investors in the friends and family round, worked part-time for 3 months, and then was employee number 1. So super lucky on that front. We've really benefited from, network effects where we take calls, get intros to different people. For me, every hire we bring on is a critical decision, like one of the biggest decisions we'll make that month or that quarter, because in these early days, if we get it wrong, that's going to compound in a negative manner. If we get it right, it's going to compound upwards. So I feel really good with who we've brought on. And I think the biggest testament is we keep getting good people. So if we had gotten it wrong, we probably wouldn't get as quality of individuals that we bring on. But there's no like secret sauce to what we've done. We've done LinkedIn, we've done Angel List to fill the top of the funnel. But it's always taking the calls and, treating each conversation as an opportunity to learn from that person and learn about them. So yeah, we have a great team.
Interesting. And in your experience, where do you think founders make the mistakes when it comes to team building? Are there any advice for listeners who are just starting out on what mistake they should avoid?
Yeah, I'll say, been doing this for a year, so I am certainly no expert. I think I've just gotten lucky most of the time. Like I that's a good question. Like one, I'm always making mistakes, and we've worked on a part-time basis with people, and we have let them go very quickly if it was not working. So for me, the business comes first. If things are not working, having those conversations ASAP, and then making sure that one, things change, or two, if they don't, they might not be a fit, and moving quickly on that. So I think anyone who doesn't work out, that's a failure on myself. Either they weren't a fit for the role, we didn't provide them with the appropriate resources or guidance. Really, everyone who we bring on, we want to win. And I think transparent communication is big. If we're big on feedback, big on radical candor. So, no one answer to that. Just mistakes are going to be made, and always trying to learn from them and do better the next time.
Yeah, no, I love that answer. And I wanted to understand, what would be, it may sound cliche, but what would be your biggest strengths and what would be your biggest weaknesses?
Yes, I am persistent. I am persistent to a fault. So if I need to get in touch with someone, I will get in touch with you, whether you like it or not. So that, relates to pushing through different things like the SEC qualification process. That involves a ton of persistence, like getting our first investors, getting our partners. Persistence is, I view that as my X factor. I always ask that question in interviews, is like, what is your X factor? And I can pretty confidently say, I have a high level of persistence, potentially top 1%, which that does work to its fault. Sometimes I'm not going to give you the answer of that's my weakness, but weakness, one thing that I've really been trying to work on, and Patrick is a good balance for this, is being less emotionally charged. I think one of the benefits is I find something, and I want to put it in motion right away. And that is great when you're trying to take something from 0 to 1. But really just sleeping on things and not making the decision when emotions, whether it's high or low, are really volatile. I use the analogy of, I try and keep my days between 4s and 6s. So as a startup founder, you're going to have good days, you're going to have bad days. And if you start having good days that are 8s, your bad days are going to start becoming 2s, and you start going up and down and up and down. So really trying to manage that, which always trying to improve.
Correct. Yeah, no, absolutely. And uh, do have you made a big purchase which has brought you a great joy? Anything, any particular product or a service that you have bought which has really changed your life?
Good question. I joined a boxing gym. That has been my best investment over the last 2 years. During COVID, I joined having never boxed. I read the book Mastery by George Leonard, where he really talks about how to you know approach learning new things. You have the dabbler, you have the person in the middle, and then you have the master, just always trying to push through the plateaus and learn. So joining a boxing gym where I was starting from square one, having never boxed before, it was a really humbling activity. And I get a great workout, and it continues to be humbling. I think it's a good analogy to startups, is you're always going to get punched in the face. And yeah, that's been my best purchase slash investment recently.
Interesting, because your physical health and mental health is really important for a founder. But also, how do you focus on mental health? Because a lot of times entrepreneurship is all about hustle, working 24/7. But what do you think is the ideal balance, and how do you focus on mental health?
Yeah, no, that's a good question. And my like I think it's probably not talked about enough. Like for me, going to the gym is a non-negotiable. Like that is how I stay sane, is go to the gym in the morning before I start my day. And I notice, like, if I don't make it to the gym or get a workout in, my stress level feels much higher. So um I've explored like the meditation and journaling side of things. I've never gotten into that habit, but I do find meditative activities where I can disconnect from work. Granted, I do think I always am working, but going to the gym, cooking is another one for me where I don't have to think about anything. I can just chop vegetables and cook. So having those outlets and having a good support system. Like my fiance has been incredibly supportive since day one. Patrick's another good part of my support system. So that's how I handle the ups and downs.
Interesting. And how do you get to decide what to focus on, what task to focus on your day-to-day basis?
Yeah, so there's what is on fire today is one prioritization method of, okay, we have to put this fire out today. That's going to be the number one priority. Everything else is going to cede to that singular priority. But we have, and it's something that I've struggled with as a founder, is like providing like a singular focus. So a few tools that we use a vision traction organizer at the highest level, which funnels down into a 1-year plan, which funnels down into OKRs. And those OKRs will funnel down into what is being done on my day-to-day sort of schedule. And I look at my schedule and make sure that every single thing that I'm doing somewhat relates to what are the goals this quarter or this year for the business.
Super interesting. And I quickly want to do the top three. What's your favorite business book?
Messy Middle by Scott Belsky. I've bought that for quite a few founders.
Yeah, I could see it at the back of your print. Yeah. And if you could go back in time when you started Vint, what is the one thing you focused on, or done anything differently?
Way less research. Just go out and talk to people and put something out there. And don't need to build a model or a fancy deck. Just go talk to people and try and sell a product.
Very nice. And do you have a favorite online tools, example, Gmail, Slack, Zoom?
Notion.
Got it. We'll put that in the show notes. Nick, what is the best way people can reach out to you and know more about Vint?
Definitely. My email is nick@vint.co. I am addicted to email and will probably respond immediately. So yeah, and you can check out Vint at vint.co. We do new IPOs about every week.
Got it. We'll put that in the show notes. Nick, thank you so much for taking our time and speaking to us. I really enjoyed my conversation with you.
Thanks, Rohit.